Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello Canadian MJ friends, gonna try and do 2 videos this weekend. We got an extra day, so more time for fun stuff. Gonna do the major names, CGC, WEED, CRON, APH, ACB, TLRY, OGI, and taking our member votes for the next video and next round of smaller names. Before we get into it, just curious, taking a poll if you guys could comment in the YouTube comments or Reddit or wherever, and let us know if you'd be interested in a service. We have a crypto service that we have created and alerts that we have created as well. This is our new version of it where the alerts show up right on the chart as they come out. But there are certain things, overbought and oversold, the simple alerts that get sent out, but also abnormal volume, overbought climax when there's volume and RSI telling us things are extremely extended, oversold climax when it's the opposite. And we're curious if people want this for MJ. It's currently $35 a month, and we would add the MJ data to it. The MJ data is really expensive. Crypto data is really cheap. MJ data is really expensive, so we're not sure if the cost is going to justify the people that are interested in it. We're also looking to add other stocks, real stocks, major stocks to the alert system as well. Shouldn't have said real. Canadian MJ is certainly real at this point, but you know what I mean. So yeah, interested if people are interested in this, and we're always constantly adding different alerts, such as exponential moving averages crossing bullish and bearish. We have one that tracks bots. We could work on things to track institutional buying and things like that. So I'd love to take this project on, but just not sure if the interest is there. So CGC on the daily time frame, I'm going to chart the names CGC and CRON in the US, and those are going to be my backbone for analysis rather than the Canadian names, because again, the volume is so much more significant now on these US names. And if you're playing the Canadian names, that just means you need to do a little bit more work and correlate those levels with your own chart. And that's a little bit of extra homework that's only going to benefit you and your recognition of certain levels on the chart as well. So as we head into this weekend, this long weekend, the bulls are still in favor, and there's 2 major things that I'm watching, and I'm getting questions from people, do we want to go long-term now? Is this the kind of position what I refer to as telling my friends and family to be looking to get in? And there's 2 major factors that are at play. The number one most important factor is the current equilibrium that we're working on. And not everybody is in an equilibrium, but CGC and WEED, our sector leader, is in this pattern. And if you look at it on the 4-hour time frame, it's a higher low, lower high tightening pattern that does favor the bulls, but we have not broken yet. And we're going to break it very likely on Tuesday. If we break it bullish, that's a potential signal to make a bullish entry, again, knowing that we're going to be running up into October, or I should say, assuming that we're going to see some run up into October. I do believe October, mid-October, is going to be a sell the news event. So you have to, if you are going to be, looking longer term, you have to be aware that you might have to stomach some red, because we could very easily see continuation, see the price of CGC go up to, $55, and then pull back down to $40, and then, if you entered at 45, you're in the red. That's absolutely a possibility, and you need to anticipate that that is possible. The second most important scenario is the S&P 500, in my opinion. We are at blue sky breakout. 2 of the 3 times that CGC has been in blue sky breakout, and the 2 major times that the entire sector has been in a breakout. Remember, CGC was blue sky when a bunch of these other names were not. Those 2 times were when the S&P 500 were at all-time highs as well. I should say was at all-time highs. So that's extremely important. And if we see SPY dump, that's going to affect everything. We are due for SPY weekly consolidation. Right now, the correlation between SPY and Canadian MJ favors the bulls. And we've seen this before. Obviously, correlations are always changing, but this happens with oil. And I've seen in the past where I'm watching oil and the S&P 500 correlate to each other, and it favors the bulls. So when oil goes bullish, SPY goes tick for tick with oil. Yet when oil stops going bullish and pulls back, SPY does not go tick for tick bearish with oil. So I call that a correlation that favors the bulls. And we're seeing that with SPY and CGC. There were multiple instances the second half of this week where on the 5-minute time frame, we saw significant bounces in CGC, and it directly correlated with significant bounces on SPY. Yet when we see SPY weakness, it has not had as significant an impact on these names. But again, it's always going to be a silver lining. If the S&P 500 pulls back 10% like it did in 2 weeks in February, that is going to hurt Canadian MJ a significant amount, in my opinion. So that is something that we need to be aware of. And obviously, we cannot anticipate the kind of volatility that we do see when these fast drops do occur. We've got Trump and Canada trade news going on. They're working on a deal. They might not get it. If they don't get it, that might lead to weekly consolidation. So the bottom line is the market is so strong. The Canadian MJ sector is so strong. In my opinion, a lot of that has to do with SPY. Obviously, not all of it. It's a combination of a ton of things, but SPY has a significant impact. So you have to keep that in mind as well. But right now, SPY is still full steam ahead, healthy daily consolidation. So the Canadian MJ bulls are not really worried about that. So let's get into this 4-hour pattern because we can see it's tightening on the daily. High, low. Remember, we had the two scenarios. It was either continuation or an equilibrium. We got our equilibrium scenario. So now we're watching things really tight. And it's also been giving some nice trade opportunities. I was trading bearish on Friday, top fishing this resistance level. So we have the all-time high, low of consolidation, lower high. Look at all these resistances. And again, I'm using extended hours because I want as much information as I can get here. And those extended hours levels add to this resistance. So we hit 46.45 right during after hours, 46.40, 46.30, 46.31, 40. You get the idea. All these rejections, 36, 38. We have about 7 or 8 rejections from 46.35 to 46.45. And it's very clear that the bulls are struggling there. And I made a trade, I'll zoom in just a moment, where I took it short at that resistance level as a top fishing play. But right now, the tight range to be watching is support of 42.88 and 46.45 resistance. If we break 46.45, the odds of a new all-time high coming next week, and us putting that fun video at the end, is going to be significantly increased. If we break this support level of 42.88, further daily consolidation is likely coming. And you can see with where we closed at the end of the day Friday, we're much closer to a bull break than we are to a bear break. And that was even with SPY seeing a bit of a bearish pullback initially. I mean, it's such a game. I mean, I've been saying it's a game at this point, but the S&P 500 Friday was a roller coaster because we had reports coming out. There's no deal with Canada. Then reports coming out. There's going to be a deal. And just watching the 5-minute time frame react to that is just funny. But here on CGC, bulls are in control. So the shorter term trades here, this is where I was top fishing, where if we break 46.45, I exit. I was building a short position in the 46.30s, and I was risking about 15-20 cents. And then obviously we pulled back, and I covered in the 45.60s and 45.70s, and that was a day saver for me. Ended up being a solid day, and that put me over the edge by playing these resistance levels. Again, very little risk because I knew if these levels break, I absolutely do not want to be in a short position. And we're also seeing Fidelity now adding a lot more shares. Like I talked about, we had no shares available to short on Fidelity for a really long time. Then we had 25,000 an hour after I complained. And then the next couple of days, we had 500, 600,000. So they're definitely adding that possibility in terms of trading opportunity, which is great for traders looking in both directions. But it's all about these levels. 4-hour time frame is what it's all about in CGC. And we look at WEED, a little bit different without the extended hours, and WEED broke bullish. So again, this is why we need to be looking at CGC because we have more volume. WEED volume on Friday, 8.4 million. And for CGC, we're looking at 14 million. That's almost double. So obviously it's a very significant difference. But for WED, what's the reason that we could be breaking bullish? The most likely reason is currency comparison, USD to CAD. With whether one's stronger or weaker is going to determine some of these resistance levels. So it is important to be checking in on both because at this point, that's almost like a false signal where if CGC is not going to break 46.45, WED is not going to follow through with any kind of bull break as well. So it's important to be looking at everything. Again, it seems a little overwhelming. This is why I highly suggest a $99 USB monitor. If you have 2 screens, I promise you it will greatly improve your ability to look at things. When I've got my first, second screen years ago, I felt like an idiot in terms of how long I waited to do that. It is a game changer in terms of being able to watch more things because if you want to be at your best, there's a lot of things to be watching. So resistance right now is 60.63 and then the all-time high up at 62.79. And the bulls just need to maintain these 4-hour higher lows to keep full control. And that's at 56.01. Bulls have control, obviously, on the daily time frame. There's no red flag unless we see a break of the 4-hour higher lows. And all that's going to tell us is healthy daily consolidation is coming because we are so extended. Cron had the recovery from the bear attack, and we had Andrew Left go on to CNBC, and the hosts did a good job of not really bowing down to him. They gave him some tough questions. They challenged him a little bit, and it's the kind of thing where at that point, I covered my puts before that aired, and my reason for covering the puts was, number one, I didn't see sell pressure into the end of the day. I saw shorts covering, and this is referring to Thursday afternoon. So here on Thursday afternoon, rather than seeing a dump into the close, we saw some shorts covering. And so I exited my puts thinking, all right, after Andrew Left goes on CNBC, that's it. The Bears have run out of their short-term ammo, and we're going to look at the potential of a bounce taking place. So we did dump down after hours, but by the time the bell rang Friday morning, the price had recovered, and we were right back up into the $9 range where I exited those puts, and then we saw a short squeeze. And so Cron was a great start to Friday, traded that bullish, entered on the $9 psychological break, and that's just because I saw high bull volume, and I saw a lot of buying pressure, and I thought we might get a little bit of short squeeze here. So I did enter it at $9, and I scaled out pretty quickly, again, not wanting to fight against the trend too hard and seeing significant gains. You know, when you get 5% in that quick amount of time on a name like Cron that's in a longer term downtrend on the hourly time frame. So I look at the hourly and say, all right, this bounce is just going to set an hourly lower high. So I did scale out of my position, locking in that profit, and the bulls did a pretty good job of holding up. So a solid green day. Our most important daily support level at this point is 854. And we have resistance now, the top of the bounce, that is at 1029. If the bulls can break 1029 first thing on Tuesday, there's not a ton of resistance nearby, so we can see some decent continuation. And you can see the consolidation at the end of the day on Friday was very healthy. Short-term support, 953. Bulls really want to hold 953 and break 1029 to see bounce continuation. If we break 953, that's just going to give us a 4-hour lower high, and we'll likely see a 4-hour equilibrium. Obviously, the correlation to the entire sector and what CGC does and how it breaks its 4-hour pattern is going to have a significant impact as well. But all in all, significant recovery from Cron. We did have some articles coming out in defense of Cron at that time, and there were some shorts that were squozen. That's a new word. Definitely some short squeeze going on Friday, and we'll see if it can continue if the sector's strength does continue as well. APH, beautiful close. It's great to see this follow through because, again, we could recognize on Wednesday that it was one of the stronger buying names, one of the strongest dip buying that we saw with OGI. And we're seeing that reflected day after day now. And obviously hitting higher highs is a great example of that. So 1695 did break, not really convincingly. We do want to see more follow through, get over 17, and it's the 4-hour higher low pattern here as well. Support is at 1553 and 1531. And in terms of resistance, after 17, we're looking back on the daily time frame to find the next levels, and there's not a ton nearby. We're looking at 1795, and then I'm looking up at 1888. So obviously a very significant move, and the weekly time frame, a very significant recovery with huge volume, and we could absolutely see all-time highs this year, which obviously long ago I said it's not likely that that's going to happen, and it is absolutely a lot more likely, and I will happily eat my words and congratulate the bulls if we do get that all-time high, because that means a lot of people are making a lot of money, and I would rather be wrong and have a lot of people make a lot of money than be right and have a lot of people lose a lot of money. So bulls are in full control, and the real test, again, what I keep saying on these weekly time frames, the real test, yes, we have a huge move and a huge surge, but the test is going to be, can we see a higher low and then continuation on the weekly? Because if the weekly chart pulls back and then we form an equilibrium and tighten up for a while, it's a completely different scenario than the extremely convincing bullish move if we get brief consolidation on the weekly, perhaps a little bull flag, and then continuation, especially for the names that aren't in blue sky breakout like APH and ACB. If we can see that, that is going to be very significant as we head into the end of the year. So APH, we have our 4-hour support, we have our resistance levels, and again, strongest name of the major names that we saw to end the week. ACB, trading sideways a bit. Clearly it is struggling a little bit compared to the other names. So right now, if I had to rank it, it would be APH number 1, we've got WEED is number 2, ACB 3, Cron is number 4, and OGI would probably be actually number 2. Forgot about that. And TLRY is up there as well. So if I had to rank them, let's try that again. We're going with APH. I'll do it at the end. ACB, 4-hour time frame, getting really tight. Support is 863 and 861, so a little double low. We did technically break to a lower low, but only by 2 pennies. But just note that nobody else is close to breaking those 4-hour higher lows like ACB is. So it's a very tight range. If we break 861, we're looking down at 818. And if we break resistance of $9, we're looking up at 910. So it's definitely a tight range here any way that you cut it. And we're probably going to correlate with CGC on how we break this 4-hour pattern, but we're probably not going to see as much strength because CGC is going to enter blue sky breakout if we break bullish, whereas APH still has a lot of overhang in terms of what we're looking at for previous resistance levels. Also worth noting, we have ETFs that are going to be rebalancing to start this month in September. And names that are overweight, there are certain holdings, if they're over 10%, they're going to need to trim. And ACB might be subject to some of that trimming in some of these ETFs. So that could add further overhang, overhead, headwind, whatever you want to call it, pressure against the bulls. TLRY, beautiful follow through. It was a bull flag on the daily. And this is something where on Friday during the live broadcast to members, I was saying, imagine it's a toothpaste manufacturer, because that's the one thing you want to do to not get biased. Yes, we know it's overbought, but if there's anything that this is showing us, anything that the cryptocurrency surge has showed us, the USMJ surge in 2013 and 2014, when known scam companies were running to $500 million market caps, if there's anything that I've learned trading, it's that hype is so much more powerful than fundamentals in short-term time frames that the fundamentals just don't matter. And this is an example of that, where we're getting so extremely overpriced, but again, it just keeps going. It doesn't matter. We're significantly correlated to the bulls. We're running in blue sky breakout. As a rule of thumb as a trader, I don't step in front of blue sky bulls. It's just a recipe for disaster in terms of not having the odds in your favor. So it's a rule of thumb, and that's something that I try and stick to as much as I can, because again, if I have rule of thumbs where I know that the odds are not in my favor and I just avoid those scenarios, in the long run, it's going to benefit me overall. So we had a little bull flag that confirmed with continuation. 55.55 is our new support. Resistance is 66.74, and then just psychological levels up to $70. I will be interested in getting puts on TLRY, but I'm going to have to either see CGC with some clear bear breaks, I'm going to have to see SPY with some clear bear breaks, and I'm going to have to see TLRY lose a 4-hour uptrend before I'm comfortable doing so. So I will be scouting puts on TLRY longer term, but I have to have clear resistance levels to put my stop levels above, and I have to see a loss and a change in the trend. So what my point was about imagining it's a toothpaste manufacturer is separating yourself from that bias. You have to ignore how overextended we are and overbought we are in terms of the fundamentals in the market cap, because again, short term, the market does not care about market cap. It's only long term that we see those things balance out. So here on TLRY, the 4-hour higher low is that 55.55 level. If we want a shorter term support, it's on the hourly, and I'd be looking down at 64.06 and 63.80. A couple levels there. We got real tight at the end of the day. And again, the bulls are in absolute full control. There is no doubt about that at this point. And I'm going to be holding off on anything bearish with TLRY until at the bare minimum, hourly higher lows are going to be lost. OGI, so here's the follow through as well. Didn't get that new all-time high on Friday, but certainly still closing strong. And it was the second highest close that we've ever seen by 1 penny. And it's right up there with strength of APH, because again, Wednesday we could very clearly see that bulls were buying the dip more aggressively in OGI and APH than in the other major names. So the 4-hour is a tightening pattern here as well, very similar to CGC. All-time high, low, lower high, higher low. The range right now is 635 support and 670 resistance. Looking at it on the hourly time frame for some more details. I don't like it there. I like it better on the 4-hour. I always look for whatever time frame shows it to me most clearly, and then that's my go-to time frame for the next day. So Tuesday, 4-hour time frame for CGC, OGI, and these names are my go-to, and then I'm going to look for little details within shorter-term time frames. But in terms of the most clarity, it's the 4-hour right now. Bulls would love to see a break of 670 and 675. Then we would look to 7 psychological. And again, bulls remain in full control as long as the 4-hour higher lows are maintained. If I had to rank these names right now, strongest to weakest, I would put OGI, CGC, and APH in a category, with the blue sky bulls of OGI and CGC having a bit more of an advantage just because there's no resistance after they do get these bull breaks. APH does have the alcohol company rumors and the potential for the next deal that a lot of people are looking for. Just keep in mind that this is being priced into a certain degree, meaning if we were to see Diago, I believe that might be it now, but if we were to see them go with someone else, we're going to see APH bearishly react to that. So keep that in mind, but it is helping the price, in my opinion, at this point. And with that amount of volume that we're seeing, there's no doubt that there is some big money coming into APH, and it's probably more than just retail. Well, it's definitely more than just retail, and it's probably more than institutional at this point as well. So we got those names. TLRY is there as well. TLRY, all-time highs, blue sky breakout. Definitely more cautious. I would not be making any bullish entries on TLRY. It's too volatile. The bid and the ask spread is too wide. And that's why it's running so hard, is because it's thinly traded in a recent IPO. But that's enough for me to say, all right, that's too high risk, high reward. I'm not interested in trading it. I'm going to stick to the other names where, you know, I can exit CGC within a 5-cent move. I can't do that for TLRY. And then as far as everybody else goes, we're going to put Kron as the weakest because it's trying to recover from that attack, that bear attack. And then we're going to put ACB there as well because it's just stalling out a little bit. Still holding on for the bulls, but just stalling out, trading sideways, and clearly not seeing as much strength as the other names. That's enough talking for me. I'll try and put out those other tickers into tomorrow. Right now, leading the charge, TGOD, IAN, HVT, VIVO, and I will do a couple more that people vote in. So I hope you all have a great weekend. It's going to be a fun week coming up, and it's all about the 4-hour time frame. See you soon.